Hey everyone, this is Michael Bengiat, and this is the Stock Picks weekend video for April 23rd, 2022. We're going to go ahead and just review the current market environment, which has become very, very tricky and difficult. We were going to review the current positions, but we don't have any because we lost them all on Friday. But we'll talk about, we'll show what happened in those stocks. And then we're going to go over the ready and watch lists, and which is shrinking rapidly. So before we start, here's our disclaimer. Just wanted to say quickly that the content information in this presentation is provided for educational, informational purposes only, and should in no way be considered investment advice. Okay, so our environment just continues to be red. We have currently no trading as our best strategy. We don't really like to be in that mode, but it's gotten pretty bad, and basically most stocks are just heading lower, and most breakouts are failing. We're just not getting anywhere. We got stopped out of a number of our positions, mostly because we did move up our stops to protect against any further loss. So some of them we got lost. We got stopped out just with a minor loss. Made a little bit of money, probably overall in our growth portfolio. And we did finally get stopped out of the second part of our Costco, which we had sold the first part on Thursday. And so we end up making a little bit of money on that one too. Not bad in this environment, but this is the environment we're given. So we can't really change it. So we've been just seeing, for a long time, the market's just not acting well. And we just saw a big break the last couple days. And we're starting to see even the strongest groups like oil and gas, they're all getting hit too. And so that's the market we're given. So, we all say, the key to longevity is just you got to listen to what the market is saying. And, for months now, you can go back, reread the notes, and you'll say we've been keeping exposure really light, and we've been, whenever the market looks pretty good or we're getting, a good number of breakouts, a good number of stocks showing up on our list, we just take a shot, keeping it small. We've had quite a lot of, failed breakouts in a row, which ended up with small losses. Overall, not bad considering we keep trying, but we're keeping it low. That's the whole key. You never want to just pile back into these markets, especially in this kind of environment. It's very easy to lose, significant amounts of capital. So, again, what's made this difficult and frustrating for everybody is that for months now, we get just enough stocks that are showing strong action that kind of keep us pulled in, and then they pull the rug out from under you. I mean, all in all, if you've been doing this for a long time and you know what to look for, you're just seeing the institutions are selling into retail rallies. Or it could be that smaller institutions, somebody's buying them enough to push them up into new highs and breakouts, but with almost without fail, the sellers are lurking there and selling into that. You have to remember too that big institutions, they may buy millions of shares of companies, and when they want to exit a position, they can't just get out when they want. They have to get out when they can. So now some stocks like Apple or Alphabet or Microsoft, they're huge trading volumes in a day. If they need to sell 1 million shares, they can do it in a day, no problem. But for many smaller stocks, they'll push the market down, the stock down 20% if they come in with 1 million shares to sell. So what they tend to do is they get small rallies and then sell into those. And then eventually when they really got to get out, like what's been happening on Friday, everyone's just hitting the exit door at the same time. And then you just start seeing the stock continuing down. So that's where we are. I just want to show you a couple things. This is the ARK fund. Kathy Wood's fund of all the disruptors, which are, I think it's really doing more is disrupting people's pocketbooks who are investors in her fund than anything else at this point. You can just see here, we've had 1, 2, 3, 4, 5, 6, 7, I can't tell, 6 or 7 down months in a row. And the relative strength is 10, so this is just underperforming everything. But unfortunately, she still has investors coming back into the stock. I just read that she has, there's not outflows, there's inflows, which, people are saying, well, I don't want to buy it when it was 100 or 110, but now that it's 52, I'm going to buy it now. Well, that's the wrong way to look at it. This is a falling knife, if you've ever seen one. It has wiped out the complete massive rally from 2021. So anybody who bought it in the last 2 years is now a loser and has lost money. You're only maybe here, but even if you had bought it here, you've just lost 50%, 60% of your gains. So why you would be buying it over here, it doesn't make any sense to me. As opposed to, and here's an example. Here's PayPal. Here's another darling of the stock market. It has wiped out its whole gain. It's actually coming in to wiping out its whole move since it came out an IPO in 2015. And when you see these kinds of plunges, a lot of times they will go down. And if the market gets ugly enough, you will see it. Many stocks wipe out their whole moves. It is not uncommon in big bear markets. But these stocks are already in massive bear markets. You can just see here, this is a monthly chart, but it went down 25% in just this month. And that's just this. We didn't talk about this part. So we don't buy those stocks. Let's compare here. This is a PayPal stock, the falling knives. But we've been looking to buy stocks like this. Here's Costco, which we just owned, and unfortunately we exited out. Just in the monthly is a little tiny blip. But these are the ones we look for. It's like this is one of the long-term outperformers where you just have nice, smooth moves relatively. You try to get in on the when it pulls into the station here. Here was a good spot. You can try to pick it up here, and then you could have just ridden it. Maybe you would have sold some of it here, but the idea is you're getting in and you'll just be able to ride it for quite a long time. This would have been a 250% move or so. Even down here, after the financial crisis, there was a nice breakout here, and that would have been a perfect time to have bought it and just hung on to it. So anyways, but unfortunately we're at the top of a market that's in a correction now, and basically closing in another bear market in the Nasdaq. So it's a different environment. Also, these whole moves going back to 2000 had the benefit of decreasing interest rates. Now we're entering a rising interest rate environment. So I expect that these kinds of moves, we're not going to see them for quite a long time. But being the stock market, anything can happen. So let's go ahead. I'm going to go ahead and just switch over, and we'll take a look at Costco on a daily chart. So 1 second. Okay, so here's our Costco chart. So you can see we bought this breakout. I think we bought it over here. There was maybe an earlier one here, but the market was pretty squirrely going into this. But we had a nice cup with handle. It broke out, didn't really test it. We came down a little bit that first day, but it ended up closing right at its breakout point. And we got in here, and then we holding it. We had its first sort of reaction, which is totally normal. It had come down to the 10-day moving average, which is this pink line, if you can see it. Totally normal. In fact, even to pull back to the 21-day would be normal. What we're always looking for is a nice restrained pullback, not big plunges like we saw on Friday. That's not a good sign. And then we looked like we had finished the little pullback, and we're trying to make a new highs. We almost made a new high on Thursday, and then it pulled back. This was that's pretty bearish action that's been going on, especially it was on high volume. So rather than lose all of our gains, we had sold into this day just because the market was not doing well, somewhere around here. And then we decided to move our stop up, and it was hit. I think our stop was at 575. So we made a little on it. It's just not a great environment to be investing in. Unfortunately, as we try to do this in the long-term outperformer portfolios, hold them for a long time, but we weren't able to. Let me show you an example of, here's one that we did have. MSCI. They operate some of the institutional financial products. So let me go to a monthly. Oh, I don't have the notes in here anymore. Well, anyways, one of the things, we had owned this for a decent amount of time, but we were looking at stocks were starting to top out. And if I draw, let's see if I can get it right here just quickly. Yeah, so here again, this is that same kind of trend line thing we sometimes show market and trend advisory, is that when the Nasdaq unfortunately has done this exact same thing, broke above a long-term trend line and is now breaking down below it. It's a bearish action there. But one of the things we look at is that we have seen that whenever the market would get to the top of this upper trend line, it would kind of pull back, sometimes sharper than others. But here you can see we actually, and this is a monthly chart, we started to break above it and we sold into this. I think we sold into this one here. And of course, being the stock market, it continued going higher a little bit, which of course is, makes you wonder, did I do the right thing? But following the rules, especially on the sell side, is important. I mean, you'll never get it right. This could have just kind of gone up to 1,000 for all in a final blow off. But it didn't. It kind of kept creeping up a little bit, and then now it's plunged. So again, we end up selling here. Doesn't matter where you bought it. Even if we had just bought it here and we sold it there, that was a nice trade. If we had been doing this for years in the service, we would have maybe picked it up somewhere here. So, but anyways, was a very good sell signal. In fact, we have a video series we're working on that we're going to be talking about all the different sell signals, because it's important to realize this. You really didn't get another sell signal until it just started to break down. So let's go to the weekly. Let's go to the daily. So I think we were over here. Yeah, you started to get some sell signals here, but of course it tried to come back out and break out again, which failed. And that was the final. In fact, here's a little tip here. You can see this was a flat base that formed. Because of the way I have to record this, I can't pull this back, so this is kind of blocking their vision. But when you start getting up to a number of stages of bases, this was stage 4 base. And I think there were 10 bases total. Sometimes we count maybe a 1 and then a 1A or a 1B, depending if this base just kind of built a base on top of another base. But when you start getting base levels, stages of 4 and 5 or more, the stock is pretty stretched out and more prone to having a correction. Well, that's exactly what happened here. When you get to a stage 4 base, the odds of it failing is much, much higher than if it just started moving from the bottom and it really hadn't made a big move yet. So then anyways, that one, in fact, you can see here, we had a number of bases kind of crept up, and then we finally had this, on the weekly chart, we're in base 3, but still, we're getting up there, and that was the final, and we've rolled over significantly. I think we sold this at 600, and now we're at 456, so, that basically wiped out a lot of gains. So, okay, well, let's go back and we can go on forever with these notes, but let me go ahead and go back to our other positions we had. Let's go to a daily. One that we had was all scripts, which is MDRX, I think. Yeah. Now this one just has pulled back to its 50-day, but we ended up buying it, breaking out of this kind of a choppy situation. And I didn't like the fact that this came out here, so we had moved our stop up. It really just was having a struggle to break out. It had tried right here on Thursday, but then reversed low. Not a good sign. Moved our stop up, and we got stopped out. Again, we might just come back into some of these stocks. This has good, nice, strong earnings going on. Not much in the sales, but in the margins have been increasing. So, anyways, but you can see, as opposed to PayPal, look at these stocks which are making. Basically, we're up at all-time highs. Let's look at the monthly. Yeah, so these are good contenders, and we have good overall ratings and everything. It just the market is holding it down. But you can see this was in the face of all the market going down. This is just off of its all-time high. So these are the things we always look for. Okay, let's go ahead and just so the video doesn't last forever. Let's go to our ready list, and we only have 2 stocks. First one is Jackson Financial. It's JXN. Again, been a kind of a choppy trader, but we're right off of, and this is an IPO, which is holding up very, very well. And we just had broken out, kind of came back down. This has been in and out of our list for a while, but our relative strength is 97, so it's outperforming all but 3% of the stocks. And anything above 95 is really a powerful stock at this point, considering that most of them have relative strengths of like 10 or less. Come across some that have 1. So anyways, we're back down again. We're going to keep watching this. Ideally, it'll kind of tighten up like this kind of trading over here, and kind of calm the volatility down, and then maybe make a breakout. But you can see just from this relative strength line, it's really starting to outperform the whole market. So we've got that on the watch list. The only other one is Procter Gamble. This is a pretty defensive company. You'll see this again in when the market gets kind of turbulent. Did have earnings. They weren't fantastic. 6%, 7% sales growth. Nothing to get excited about. Tried to break out, and then it's been pulling back with the market. But look at the relative strength line. It's just really starting to outperform the whole market. This is a stock you don't, even though we've seen pretty big moves, which is kind of rare for a stock like this, it's something we would probably just look for a shorter trade if we get into it. Long-term performers ready list. There's nothing. They all got wiped off. So let's go to the watch list real briefly. We have Devon Energy. This was been a really strong one. And again, we're starting to see the oil and gas stocks get hit, and we just came down to the 21. Other moves down to the 21 have just quickly reversed higher. Maybe this will happen, but we don't know. It's looking like it could be the end of this run for these stocks. Next one is PDC Energy. Relative strength is 98. Devon was 99, it's outperforming basically all stocks. This one too, it just hasn't really done anything wrong, so we're just watching it. Earnings are coming up, so we got to be a little wary of that, investing in front of it. Next one is Swch, SWCH. It's one of the rare tech stocks. They operate and develop data centers. And this one had broken out and just isn't really doing anything wrong. I mean, we had a little lopsided cup with handle. You can see that it's just not really a nice smooth cup. This handle should have been over here somewhere and much smoother. It looks a little like truncated, like it just went down and went right straight up. Anyways, but it broke out and worked. It just kind of had its first pullback, tried to break out again, and then that breakout has failed. So it's a little warning sign there. But its stock's doing really, really well in this environment, an RS of 96. So we're watching that. Shell, that was one that we just owned. Again, we had bought it in the breakout. See how it had nice tight trading here? That's what we always look for. We don't like them just to blast off because it's easy to get overextended quickly. But the fact that it's an ugly market, we moved the stop up. We got stopped out right around where we bought it. So really nothing wrong with that. It doesn't look bad, so it's still on our list. The next one is Lsi Live Storage. We do have another one, extra storage space, which we did get stopped out of also at a tiny loss. So self-storage properties are just, you can see when you start seeing the same sectors showing up, it's something to keep your eye on. That's really a clue. Like going back to a number of months ago, we started seeing all the oil stocks set up. So that's something that you want to kind of keep in mind. So this one, again, tried to break out, has broken below its buy zone because of the market. And extra storage space, a little stronger. See the RS is 92. And this one broke out, but it's just back to there. We just moved up our stop to protect it and got kicked out of that. So that's fine. A couple more. We have General Dynamics. Again, we have another one on here, Raytheon. These are both in the aerospace defense area. And they're acting well. And there's a few other ones in this too. So this area, probably because of the Ukraine-Russia conflict, is anything to do with defenses. Money's flowing into it. It's really doing nothing wrong. It just broke below its 21-day. Had a little run here and pulled back. So looks pretty good. We're going to watch that one. Let's take a look at RTX too. That's Raytheon. Similar, a little bit stronger sell-off. And its earnings are in a few days, so we'll just watch that one and see how it does. A few more. We have Kforce, a staffing company. It's just been kind of forming a little waiting pattern almost. The only thing we don't like is sometimes when these patterns go on for a long time, they're just not. Sometimes we like them when they form, tighter patterns and then they break out. Like here we had this bigger move down and then came up and then a smaller move. It's less lower high, lower higher low, and then we have a smaller one. So this would have been ideal for this breakout to work, but it didn't, and it just kind of meandering again. And it looks like it's the character of the stock. You can see the same thing over here, and eventually it broke out. So this one we'll keep watching, but if it just keeps doing this action for a while, we'll take it off the list since it doesn't. It's not really doing anything. This one broke out on earnings. Nice little tight trading here, even with it tried to go out of this little pattern, pulled back just a little bit, shook some people out, and right before earnings and took off, but then it got hit by the market and we're back down below, but it's also looking pretty strong. Again, insurance companies are another one that we've been seeing. We did have Brown and Company on our outperformer lists, but this one just really broke down hard, which is, we never bought it, but it looked really good. It just had a couple shakeouts, tight trading here, broke out, looked good, just kind of hanging in there, and the market just pulled it down. So we took it off the list, and earnings were in 2 days, so we're going to just, maybe it'll come back on if the earnings are good. And then we just have one more, a little lower in the RS rating, Crown Castle, another REIT, which is a real estate investing trust, which is also the same for Life Storage and Extra Storage Space. We're starting to see more of these REITs come up, which are defensive, and they pay nice dividends, generally. This one, it's a 3% yield, so not bad. This one looks pretty good. The cup depth, you can just see it. Here we had a depth of 19%. We get these stats in these Market Smith charts. And this one you can see was actually faulty. It was not, you can see it just kind of came down and then just came straight back up and just kind of paused a couple of days and then tried to break out, which is not what, you always like to see a little more of a handle form. Tried to break out and formed another base, but even worse. It just went down 25%. But at least it formed a handle, or it's in the process of forming a handle, and then we have another buy here. You have a little signal right there. This one's, it's low on our list. Ours is only 82, even though it's been rising nice and strong. But we'd really like to see this not just break out of here, because there definitely was sellers lurking and from 200 to 209. It doesn't look like it's really ready yet. Having two of these, especially a cup that formed after another cup and then went even lower, it makes it a little suspicious. And we have one final stock, which is on our long-term outperformer, which is Centene. The managed care medical sector was doing really well. Anthem and United Health and I think HCA, which is a hospital operator, they were doing really well. But HCA, this is what we've been seeing, unfortunately lately. A lot of these just, killing, this was down 22%. So a lot of these stocks that were doing pretty well, like Anthem, basically has given up most of its breakout. We had United Health. We're just seeing this kind of action is just, it's not good. There's been a few other bombs. So, well, that's about it. We'll just continue to watch the market. We don't like the fact that we're at zero exposure, but, it can change any day. We may be changing this on Monday. From our market trend advisory, though, we're kind of waiting for a new uptrend, which would come only after a follow-through day, but we haven't even had a rally attempt day yet. So if I just go really quickly let's go to the Nasdaq. So a rally attempt day will be when we finally get in this case, a blue day, an up day, and then we look for a follow-through day, which can come on day 4 or after. So we haven't seen anything. Like in example here, we had this day, and then we had the follow-through day over here. And then we had a really strong move, but failed at a key moving average. So it does look like this market is going to test the lows and maybe even break below. But we'll see. So right now, we're just out of the market, and we'll watch. We'll keep updating our lists. And hopefully the market will improve. It's been quite a long time that the market's been poor. Just one last thing, sorry. We'll take a look at the Russell, and let's look at a weekly. The Russell's for the small caps. And really, you can see it was in a big trading range for most of 2021, and really this was, we buy a lot of stocks in these areas too, the mids and small caps. They just haven't participated. They finally had a big breakout. It looked like the market was off to the races, and it failed very quickly. Just a couple weeks later, we're down, and then we're breaking down below. So, and you look and just see the RS line is just declining. So the market's just, it's not healthy. So we'll just come back. We're going to watch probably most of this week, and ideally we'll get some good signs coming up, and we'll be back in. But we're never in a rush. We have to have patience. We don't want to lose money. We really haven't seen any environment for a long time where we could get aggressive and really go 100% in our portfolio and just seeing pretty easy gains. That hasn't been the case for over a year and a half now. But that time will come. But we'll be patient, and just stick with us. We'll be there when the easy money's there, and we'll be there to pick it up in the corner, as that saying goes. You want to wait till the money's just lying in the corner, and you go and pick it up. We don't have that. We've been going in the corner and getting beaten up. Things dropped on our heads. The money disappears out of the corner, or you go there and it was fake. All those kind of things. So, anyways, that's it for this weekend, and we'll talk to you next weekend. Okay.